Is this a negotiating starting point because he wants a deal, or does he want tariffs?
Well, certainly this seems to be the opening gambit. It's interesting to see also what he's tying it to, because this is not him saying he's going to put tariffs on China or Mexico or Canada because of economic policy or corporate behaviour. It's using tariffs as a lever for political policy to say, well, I want action on migration and fentanyl. I want action on drugs. And if you don't do those two things, I'm going to respond to you by hitting your companies and your products. And so it's using, again, what we saw very much in the first iteration of Donald Trump, is tariffs are not just an economic tool, but they're very much a political and a geopolitical tool. And that's the way he's going to see it. So this is probably an opening gambit. It might be also he saw the response to the nomination of his Treasury Secretary and, you know, all the talk that he might be slower on tariffs potentially than Donald Trump would want. Maybe this is a message saying he would act, although 10% on China is probably something China could live with from the outset, but certainly it's just the opening salvo. He's not even in office yet. So what this means is countries like China, Canada, Mexico have, you know, a few months at least to think about how they would respond in actuality if this does happen.
I mean, Michael, the problem is that, again, it's difficult to look at this is not, I mean, it's policy, but actually it's more of a negotiating tool.
Yeah.
So how do you, I mean, as a market participant, how do you make sense of it?
Well, he is using it as an all-weather tool for obviously getting to results that have nothing to do with economics. What it does is it puts pressure on currencies. Tariffs are messing up with the terms of trades of countries in ways that firms are not prepared for long term. Short term, therefore, you're on the losing end if you get hit by tariffs. And the expression of that is actually a strengthening or weakening currency to balance out the terms of trade.
But, Michael, I mean, I have many questions. First of all, do we know, you know, is this inflationary? Because, again, there's many questions. If you're hit by tariffs, does it hit growth first or inflationary? Because that will change the reaction function of central banks.
It very clearly first hit inflation. And then, depending on how effective it is in, let's say, the U.S., it may or may not hit growth. But it clearly protects U.S. companies for a period of time from import from other places.
Ros, is it too soon to infer some of the other policies, given who he's put in his cabinet?
Well, it's very hard to know because some of them have to be confirmed first, although we'll see even by the replacement of his nomination for Attorney General, you know, the replacement nominee is also very loyal to him, someone who's been a conservative lawyer in his orbit for many, many years and someone who will faithfully enact his policy. And so what he really wants, either way, is people who will enact his policy perhaps slower than he thought. And again, with the Treasury Secretary pick, Besson is clear, you know, he's a fiscal conservative and so he might try and manoeuvre a bit. But elsewhere, he's looking for total loyalty or he will replace you pretty quickly. But it's just clear that Donald Trump will, if he sees something he doesn't like or something you do he doesn't like, he will just act accordingly. And it's very clear what he wants sorted or what he says he wants fixed very early on. He wants the war in Ukraine to come to an end, for example. He wants the war in the Middle East to come to an end. And whatever happens, whether it's ceasefires or peace deals that are, you know, not necessarily conducive for Ukraine, he will declare victory and say that that's done because he likes to declare victory on things. And so that's very much the way he's going to operate.
But, Ros, do you take every time there's, you know, he says something, do you take it at face value? Because that's going to be difficult for the markets. It's, you either try and say, well, this is what he's going to try and do, and the markets may do this, or do you literally just think, well, he wants this, and he's saying it, so that's what we should model?
Well, that's the difficult thing because Donald Trump can say something one day and the next day say the opposite. So he might say that one day he's going to sit down and talk with the North Korean leader and the next day he say that he wants war with North Korea or something. So it's very hard to beat. But you have to take him literally each time. And that's the difficulty. But countries in like China, Europe, for so on, what they need to do is look through the very immediate and say, where do we want this to be in 6 months, a year, 2 years? And how do we navigate our relationship with the White House through to that, you know, that noise of the immediacy. So you've got to keep the long game in mind.
So, Michael, how do you deploy capital in this kind of very uncertain world?
Well, follow and don't be on the wrong side of Trump, at least for the near term. I think in this term you need to take him more literal than in the first term. In the first term, he was balancing, trying to find compromises with people in his cabinet that he didn't really like and that were not loyal to him. Yeah. He's picked a cabinet now that is 100% loyal to him. And I would take it very serious, what he is saying. He is saying this now before going to office. That creates, the stakes are being built up for deals. That's very clear, but I would take him very serious.
Yeah.
Having said that, I would still deploy capital on the side of Trump, on the Trump trade, which is US equities, US dollar, actually US rates, which will stay quite high because tariffs are inflationary.
So on dollar, I mean, he doesn't really want a stronger dollar. So actually, this could be complicated for.
Then he should stop talking about tariffs.
Yeah, who's going to tell him? Treasury Secretary or the Federal Reserve?
Not very. He's quite resistant to advice. So, but he is also sort of a guy that wants to get to a place where he can say, "I did this to protect jobs in the U.S."
So, Michael, again, what's changed in terms of your portfolio management since since he got elected? Have you just gone and doubled down on some of your positions in the U.S., or have you had to move stuff around?
Well, we went overweight equities, and we think Donald Trump's re-election is a reconfirmation of a risk-on environment for the moment. Actually, U.S. growth is going to stay probably stronger, not because of the tariffs, but because of sort of typical Republican policies, lower taxes, deregulation, and he has vowed to invest materially into the U.S. industrial economy, with potentially debt going $6 trillion higher. And that is a boost to growth. It's what we call U.S. on high octane, and you need to be on the right side of that, and that is be long U.S. equities and be long equities in general.
Ross, how much do we listen to? Of course, we listen to the Treasury Secretary, but how much influence do we think that he'll have on President Trump?
Well, again, you were just hearing, like, he does demand total loyalty from everybody, but we also know, again, like, he tends to listen to the last word that's said in the room before people leave. And so if you're Besant and you're thinking, what I need to do here is to be the last person speaking in the room and plant that thought in Donald Trump's head right before I walk out the door, maybe that's the only tactic.